Hey guys, I'm back from my work meeting last week, and today the market is very red. So you can see that due to the US government attacking Iran, there is blood on the streets here, and most sectors and most stocks are down today. But the one bright spot here is, or one of the few bright spots here is Tidewater. And Tidewater recently reported earnings yesterday, and they did phenomenal. So I'm going to go through in this video their earnings report and several other factors why I think Tidewater is still a great multi-bagger name for years into the future. So if you like this content, please like and subscribe, and let's get straight into it. Now, right now, Tidewater is up around 7 to 8% on the day, and it started much lower, but I think investors are, digesting all the earnings report information, the financial information, and what was said on the earnings call, which happened separate to the earnings numbers, which happened yesterday about 8 a.m. Central Time. The management of Tidewater gave the earnings report. I listened to the entire thing, and it was amazing to hear some of the things that is happening at this company. So I'm going to go through that. First thing I want to go through is their actual numbers. So let me pull that up. So for the full year 2025, their revenue was $1.3528 billion, which was an increase of 0.5% as compared to 2024. Their average day rate was $22,573 per day, which was an increase of 6.1% compared to full year 2024. Net income was $333.5 million, and adjusted EBITDA was $598.1 million. Net income was favorably impacted by the recognition of a non-cash deferred tax benefit of $201.5 million, primarily due to a strategic internal restructuring of our vessel ownership. So that's really important, and that will show you why fourth quarter data is a little bit skewed with their net income and EPS numbers, just because of this one-time non-cash deferred tax benefit of $201.5 million, which came from, changing up their vessel ownership. Net cash provided by operating activities was $379.1 million. Free cash flow was $426 million. Share count was reduced by 2.5 million shares during the full year 2025, even though they didn't do any share repurchases in the fourth quarter. And they did that for $98.2 million at an average price of $39.52. And right now you can see the price is $85, $86 per share. So this is way earlier in the year of 2025, including shares repurchased in exchange for payment of employee taxes on the vesting of equity compensation. That was full year 2025 results. Now the fourth quarter 2025 results, revenue of $336.8 million, which was a 2.4% decline compared to the fourth quarter of 2024 year-over-year data. Average day rates of $22,044 per day, a decline of $192 per day or 0.9% compared to the fourth quarter of 2024. Net income of $219.4 million and adjusted EBITDA of $143.1 million. So they're saying that net income and adjusted EBITDA were favorably impacted by the $2.1 million foreign exchange gain due to the weakening of the US dollar, and the net income was favorably impacted by the recognition of the non-cash deferred tax benefit that we spoke about before of $201.5 million, primarily due to the restructuring of their vessel ownership. So net cash provided by operating activities was $153 million and free cash flow of $151.2 million. All in all, they updated their annual guidance for 2026 to $1.43 to $1.48 billion, and their 2026 gross margin guidance to 49 to 51% from their announced Wilson Sons UltraTug acquisition. So we'll talk about this acquisition in a later segment. But because of this acquisition, they're updating their gross margin guidance to 49% to 51% pro forma. Since they didn't do any share repurchases in the fourth quarter, their share repurchase program authorization is still $500 million. So they can deploy this at any time when they have that type of cash on the balance sheet. So all in all, their full year and fourth quarter 2025 highlights and financials were really good. And it's almost like they've turned over a new leaf in this company, and they're posting huge free cash flow and are poised to take advantage of the updated guidance and acquisitions that they've taken hold in their company. Now, I was listening to the call, and management said that they still have that $500 million share repurchase authorization, and that would represent, as of today, 13% of the outstanding shares. So their common shares outstanding right now are 49,566,334 shares. They have some warrants. So the warrants include, new creditor warrants, which are 21,400, and Gulfmark creditor warrants, which stands at 53,555. So all in all, their total shares outstanding are 49,641,289 shares. Other major news for Tidewater, besides their earnings, was their acquisition, which they announced last week, of Wilson's UltraTug Offshore Acquisition. And this is a company based in Brazil, as a Brazilian company. And so the transaction overview here from their investor presentation: Tidewater has entered into a definitive agreement to acquire Wilson's, owns 22 PSVs, 19 of which are Brazilian built, establishing Tidewater as one of the main providers of Brazilian built PSVs. That allows Tidewater to use international vessels, their own international vessels, in Brazilian waters. So that's really important for how they interact with the Brazilian government and operate in Brazilian waters. This transaction continues Tidewater's track record of acquiring modern, high-spec fleets and firmly establishes it as one of the main providers of PSVs in the robust Brazilian offshore vessel market. Now, the consideration is it's a $500 million all-cash acquisition that Tidewater expects to fund using a combination of following: assumption of the $261 million of low-interest long-term debt provided by BNDES and Banco do Brasil, and the cash they have on their balance sheet. The timing is standard regulatory approvals, the Brazilian government, and it's expected to close in late Q2 2026. And they, on the call, management said around July 30th of 2026. Now, the strategic rationale behind this acquisition, it continues Tidewater's track record, obviously, of acquiring large modern fleets of OSVs, with pro forma fleet of 213 OSVs when this closes, with an average age of 13.6 years, which is relatively young compared to other competitors in the field. It provides a compelling entry point and scale into Brazil, which is one of their largest and most prolific offshore oil and gas markets in the world. It establishes Tidewater as one of the main providers of Brazilian-built PSVs. Acquired fleet, and this is what I was saying earlier, also provides meaningful REB capacity, and REB stands for Brazilian Special Registry, which provides optionality for legacy Tidewater vessels not in those waters to pursue opportunities in the Brazilian offshore market, so they can bring in PSVs from other parts and have them work in Brazilian waters. There's a meaningful backlog coverage with opportunity for contracts to roll onto significantly higher day rates. So the expiration of contracts will allow them to renegotiate these contracts for higher day rates. These contracts were made a few years ago and they were at a much lower day rate cost. So now they can roll those and make meaningful higher amounts with higher day rates. They deliver significant accretion to 2026 estimated and 2027 estimated earnings and free cash flow per share. And it's built-in low-cost, long-duration financing that provides compelling cost of capital advantage. Now, a little bit more about the operational side of things. The acquisition, they have 13 PSVs with 12 years of average age that are greater than 700 square meters of deck space. And they have about $294 million in backlog. And then there's 9 PSVs with less than 700 meters squared of deck space with an average age of 17 years with $147 million in backlog. Their customer mix is mainly Petrobras and a little bit of other like Fendercare and Subsea 7 and others. The organization is 966 employees, 734 offshore, 231 onshore. Headquarters in Rio, and here's some pictures of some of the PSVs. Now, Tidewater continues to expand and evolve. It's high-grading its fleet by focusing on high-quality, young asset and value accretive transactions for in-demand vessel classes. So here you can see that Tidewater Legacy had 108 vessels in its fleet, and then they acquired Swire and Solstad, and what Tidewater is currently, which is 191 vessels. And now Wilson's is going to give them another 22 vessels. So pro forma, they're going to have 213 vessels after this closes. Looking at their competitors here, you can see the average ages of all their competitors' fleets and Tidewater's. It'll be around a little less than 15 years of age in their fleet average. That's one of the lowest aged fleets in the industry. Most of their competitors are closer to above 15 years, and some of them are approaching 20 years in average age. So here you can see, like I said before, Brazilian-built vessels would enable Tidewater to import international vessels under REB. So now they'll be able to operate very effectively in Brazilian waters. The leader in the number of PSVs in Brazil is Chuest with 29, and then CBO with 23, but then this puts Tidewater at third in Brazilian waters. Now looking at their pro forma debt payment profile, you can see that they did that restructure of their debt earlier in 2025. So what that means is basically they have very few and minimal debt payments up till 2030 when the debt is due. Majority of that debt is at 9.125%. Senior notes due July 2030. So by that time, they should have significant free cash flow, even more so than now, and a ton of cash on hand on the balance sheet, which they could use to just pay down this debt immediately at that time if they haven't done another acquisition in between. So it's really important for Tidewater to maintain a low debt profile so they can return capital back to shareholders. So the summary of this acquisition is now they're the largest global OSV operator. They have attractive market fundamentals supporting meaningful cash flow generation capacity. They have a strong global footprint and increased exposure to blue chip operators, full cycle financial resilience with strong balance sheet and liquidity. And these are things that were true even before this acquisition. It's only strengthened with this Brazilian company acquisition. Now, on the call with management, I heard that if the market tightens up even more globally, they could be seeing increases of $3,000 to $4,000 per day per year in their day rates. So right now we saw an increase of around $1,300 in their day rates in 2025. So if that is a meaningful increase in the future years, we could start seeing significant cash flows and free cash flows at this company. Day rates closer to $30,000 per day. We could see increases in the building of supply vessels going forward. But right now at a day rate of $22,000 to $23,000, we're seeing significant cash flows at this company. And not to mention ongoing geopolitical risk with Iran, with the Strait of Hormuz closing, that spikes oil prices, that spikes gold prices, the volatility increases with that. And if you're worried about the fuel costs that Tidewater would incur with increasing oil prices, those increased costs pass on to their customers. So they're not really affected by these Iranian hostilities, and they will mitigate these just like they mitigate anything else. Since they're a global company, they operate in several different segments around the world, Middle East only being one part of it. They're not going to be super affected by these hostilities. Let's look at their valuation here, and on Simply Wall Street you can see that they are 57.4% undervalued. Their price is around $80. It's now obviously a little bit higher than that, $6 higher than that right now. But on Simply Wall Street, they have a cash flow value of $186.53, which indicates a significant undervaluation at the current prices, even at the current prices of $86 per share. So based on this information, based on the recent earnings, based on the acquisition that they did of this Brazilian company, I'm very confident in holding Tidewater shares and adding to my position in the public account. Any dips that I see in this stock, I will be buying. I see this very strongly in 2027 and 2028 and into 2030 because they're going to be generating strong free cash flow. They might do another acquisition in that time, and that's only going to be value accretive to their fundamental financial numbers. So yeah, at any dip in this company, I'm going to be buying. I would love to get this to 500,000 shares in my portfolio if I can. That's it, guys. If you like this content, please like and subscribe. I will have another video out soon about talking about the overall geopolitical market right now, risks in Iran, talking about commodities like gold and oil later this week or maybe early next week. I'm talking about that, and I'll see you guys in the next one.